Welcome to the video, The Concept of Scalping. What are we going to learn in this video? We'll learn what is the true definition of scalping, what work will you actually do as a trader, how a trading session unfolds, and what are the instruments? What are the platforms that will allow us to do order book trading? Additionally, what is an order book and what is the information we can actually see on the screen? So when we do a little bit of search on the internet as beginner traders, and we read about day trading, swing trading, scalping, it can be very confusing for most. And this is because of the enormous amount of information available on the internet. And I can tell you that about 90% of the information that we find on the internet is not well explained or just incorrect. Scalping in trading is to take advantage of the small variations in the market in order to make a profit. Therefore, in scalping, we'll hold a position for a few seconds or a few minutes. In swing trading, we'll take a position in the morning and will exit at the end of the day or a few days later. In day trading, we'll take a position in the morning and exit at the end of the day or end of session. Scalping lets us take multiple positions in the market. If we have a look, for example, at this chart, we would ideally take a position here before the rise and then exit here. We would take a position here in order to profit from this rise. And in this zone here, we'd exit our long position and take up a short position. That, of course, isn't an ideal example, but it illustrates the concept of scalping and how we'll be using the movement in the market to trade. Thanks to the order book, we'll be able to identify these movements. In this example, we see columns of ever-changing numbers. This is the order book. It allows us to, unlike charts or graphs, to see the intentions of buyers, the intentions of sellers, and here in the center, transactions that have actually been executed. So if we do scalping with technical analysis, on the internet, we see many traders who employ technical analysis in order to do scalping. They are missing out on a lot of information. Have a look at the candlesticks in this chart moving up and down. The candlesticks themselves do not affect the direction that the market goes in. However, the direction is affected by the orders to buy and the orders to sell, as well as the transactions that have already been executed. It's important to understand that what drives the market higher or lower is the volume of transactions. And the volume of transactions are uniquely visible in the order book. So in technical analysis, most of the time, the guidance will be simple. For example, if the candlestick goes beyond this level, then I'll take a position. From a theoretical point of view, this is very easy to understand. However, in practice, it's very difficult to use. With the candlestick approach, you have no performance tools to tell you if the market will break or not. And so, when we do technical analysis, you'll be told to trace your lines. At times, this feels a little nebulous. You'll say, put your stop at this level and put your take profit at this level. However, you'll be taking an enormous risk in placing a stop at a technical point that was created by some lines that were put in the market chart, because when the market evolved in this zone, the context of the market was completely different than this one here. And so the order book allows you to see in real time if there are large traders, large banks, large investment funds move millions in and out of the market. And it is these traders, these movers, that will create volume which will drive the direction of the market. It's not the candlesticks here that will decide the direction of the market. Think about this. Imagine yourselves at a meeting at Goldman Sachs, some large investment fund, or some giant trader. And imagine if they say something like, well, today we're going to have a break in these candlesticks. We have a Fibonacci and a moving average that crosses, and so we'll take a $400,000 market position. I'm sure you'll agree that that is completely ridiculous. Technical analysis will be useful to you if you're doing long-term trading. It will help you to understand the movement of market pricing in the past, but you will have to do fundamental analysis and understand why these movements actually happened in the past. When we trade, uniquely using the order book approach, we just don't use charts. The only time you'll actually see me using charts is when we're preparing for the session. So when we're preparing for a trading session, we'll have a look at the previous session's chart to refresh our memories on what happened in the previous session. We'll refresh our memories on what the price levels were. We won't be able to know if, for example, with respect to this candlestick, whether there was a huge battle. Were there a lot of traders? Was there a lot of volume? Was the battle tough? That we won't be in a position to know. So the order book in real time allows us to know what's going on. So with the order book, you're reacting to what is happening at this instant. And with charts, if you're using them to do trading, you'll try and guess what the future is, guess what's about to happen, based on candlesticks that don't include a lot of missing information, and above all, things that have already happened in the past and of which you don't understand the context. So we'll be looking at together how the order book works. There may be some of you that already know what an order book looks like. For those of you who don't, we'll do a quick tour. So what you have here in blue are the bids, the intentions to purchase. In red, we have what are called the asks. These are the intentions to sell. It's the number of traders who decide to place orders in the market to initiate a short position. And in the bids here, these are the number of traders that want to initiate a long position. Here we have the price column, right next to what we call the volume profile. The volume profile will serve to help you remember the number of transactions that were really completed since the opening of the session. So when we talk about support and resistance, it is not with the lines of technical analysis that we will operate with. It will be the volume profile, because the volume profile will give you the zones where the battle really happened, and these are the real resistance and real support with respect to the volume of transactions that happened in the market. In the middle is what we call the tape or the inside print. This indicates the number of contracts, the number of transactions that at this moment have been completed, either at the buyer's price or at the price of sellers when it's in red. So your role as an order book trader will be to analyze the offer and the demand and see the transactions that were really processed. It's with this information that we'll be able to note manipulations in the order book and be enabled to make trading decisions. What is important to know is that professionals use the order book. If you do a Google image search and type trading floor, you'll be shown images of large trading floors. chock full of computers displaying images similar to what you see here. You won't see charts with moving averages, stochastic processes, Fibonacci's, etc. You will have no chance to be successful at trading or to live off trading via the scalping method if you use graphical indicators and analysis. I can guarantee you that. Throughout this training course, we will look at how to trade using uniquely the order book. You'll see that it will take time, but you'll see that as you move forward, you will be able to, just by looking at the movement in the order book, have the ability to build the chart in your mind. If you still keep your eye on the charts, you will not evolve as a trader. You have to get rid of the charts and base it on the price action. What is the price action? It is the number of transactions that are currently being executed, how the bids are reacting, how the asks are reacting, and the movement of the market. So, in order book trading, everyone moves money, and the side that moves the most money, buyers or sellers, will wind up moving the market. The advantage is that the futures contract market, traded on the Chicago Exchange, the C-Boat, is a centralized market. So you have this transparency. At this moment in time, I myself, thousands of traders worldwide, large investment funds, when looking at the order book, all see the same thing. So that we'll see the same asks, the same bids, the same final transactions that happen in the market. And that's because it's a centralized market. All the orders, all the transactions are done in one single place, one exchange, and that's the C-Bot in Chicago. We'll also talk about the trading hours or schedule. So throughout this course, when I talk about a certain time or hour, for example, when I say 10 o'clock or 12 o'clock, it's with respect to the time in New York. So East Coast New York time. The Treasury bond market opens at 8:20. The New York Stock Exchange opens at 9:30. What you see here are U.S. Treasury bonds. The ZB is the 30-year U.S. Treasury bond. The ZN is the 10-year U.S. Treasury bond. And you have the ZF, which is the 5-year U.S. Treasury bond. You may be thinking, why are we looking specifically at these three bonds? And that's because these three bonds function in correlation with each other. That means to have a global understanding of the market, you will have to be able to see these bonds at the same time. And you will see all through this training course to what extent it's useful to watch these three bonds. In addition, we'll add the S&P 500, the ES, which will also serve as an indicator. We'll also be applying the same trading strategy to the ES. When we talk about volatility, when I have conversations with new traders, they tell me that they like very volatile markets because it allows them to make gains very rapidly as a result of the market shifting from one extreme to another. And that, of course, is true. So why have I selected Treasury bonds? Firstly, it's a heavy order book. A heavy order book is when, at every price level, there are an enormous number of contracts on one side and the other. In a light order book, in the place of here where you see 3,400 or 4,000, you would see 12, 20, or 30 contracts. It's easier for a major player to move the market in a light order book than in a heavy order book, as we see here at this moment. The advantage of Treasury bonds is they allow you to limit your risk to a minimum. With the order book, we are in a position where we can instantly know if we are wrong. So when we take a position, thanks to the bid, the ask, and the inside print, if we take a position and realize that we are wrong, well then the order book will be able to tell us immediately, thanks to the information that we see, that you should exit your position. It won't work. When you base your trading on technical analysis, you'll be told to put a stop at a certain level. Then as long as the market shifts towards your stop, they'll tell you that my stop is at this level here, and I'm going to wait for my stop to be hit. When you're trading using the order book, you never wait for the market to hit your stop. You'll be able to see immediately if there's a problem, and that's one of the advantages. Additionally, thanks to the order book, you'll be in the position of knowing exactly when the market is turning. Later in this training course, you'll see a video on absorption and backticking, in which I'll show you real trades that I made where I was able to exit exactly when the market turned. There's nothing magic about it. It's not a famous technique or the Holy Grail. It's simply the ability to read the order book and see that the market is stopping for this and this reason. So throughout this trading course, we'll be looking at examples of real trades that were made, in which I'll take the time to explain slowly and in many different contexts the trade that I made, why it worked, and I'll also be showing you losing trades, because it's also important to see when things don't go well. And that will help us to not repeat the same errors. We learn a lot more from watching people's mistakes than when we're shown that everything is good and well all the time. So you'll see trades that didn't work, and I've also included trades that are stupid, so you can see what you should absolutely never do. So my name is JB, and I've been trading for the last 10 years, but have spent the last 6 years specializing in the order book. I use absolutely no charts for trading. I base it all uniquely on the price action. I can tell you that once I switched over to the order book method for trading, I was finally able to achieve the level of a professional trader. Why? Because the order book and futures contracts are professional markets. They work in a professional manner. So to get professional results, you have to act professionally. And that's what I'll be showing you. So you have to know that with this trading course, you're not going to be driving a Lamborghini within 2 weeks. I prefer to tell you that you're going to have to work very hard, but thanks to the tools, thanks to the techniques that I'll show you that allow me to live comfortably off of trading, you'll have all the opportunities to do the same yourselves. So, the concept of trading. Your job will be to analyze the bid, the ask, and take a position in the markets. Here we're in simulation mode. When you see pink, it's simulation. And when you see account sim, it's not real money. It's simulation. Your goal as a trader is to analyze what's happening at the volume profile level, the level of the ask, the bid, and the inside print, and make a trading decision to say that the market will stop at this level here. It's trying to break its high. We see that it's not able to go lower. We'll try and take a long position to retest the high and potentially take advantage of a breakout. If you don't understand anything of what I just said, do not worry. I'll be explaining all the strategy and the terms that I used in the coming sections of the training. Scalping allows you to take many different positions during the trading session, and the advantage is if you're wrong, you will know immediately and you will be able to exit your position.